Welcome to this stock analysis update for Cornish Metals. Please remember this is not investment advice and always speak to a qualified financial advisor before making any investment decisions. So I did about an hour of Cornish Metals videos back in December of 2023 where I go into a lot of detail. I then did a video in April last year, after which I bought some. This video is going to be an update on what's happened since last April. But of course, the reason I'm doing this video is because they've just come out with a absolute stonker of an RNS in which they've just raised 56 million in a capital raise. Now, I've summarized the details of this new fundraising in this slide, and it's all come about actually from Rachel Reeves' National Wealth Fund, who have put in 28.8 million, and then Vision Blue Resources, who currently own 26% of the company, they've bought 18.3 million worth of shares to keep their ownership at 26%. And then they've found 8.8 million from other institutional investors. They were hoping actually to find about an extra 6 million, but there wasn't the interest. And so overall, they've raised 56 million, plus actually 1 million from a retail offer. I've said that the deadline till the final investment decision has now shifted 3 months to the first quarter of 2026. So actually, from their initial IPO and 42 million capital raise, the whole project's delayed now by a year. But the good news is they now have money to keep them going all the way up the final investment decision, and they should have the mine dewatered and the new cook kitchen shaft refurbished by then. So this is really good news for Cornish Metals shareholders, and they gave a breakdown of how they'll be spending it: 13.3 million on mining works and dewatering, 17.2 million on early works and long lead time items. So that's around the processing plant that they'll have to build. 5.1 million on project engineering studies. So that, I believe, is what I've got here as a feasibility study that's kind of required before they raise the money for the final investment decision. They owe Blue Vision 7.8 million and they're going to pay off that debt, plus 12.6 million for just general running costs and a land purchase. So it's good that they can use all this cash to get to the starting line, which is now delayed until the end of the first quarter 2026. Plus, they've actually covered 20 million of the total capex they'll need. And this puts them in a position where actually they could potentially get some kind of finance facility rather than actually having to do another capital raise in order to build the processing plant and get the mine going. Looking at how much money they're spending here on things like the dewatering, engineering studies, plus how much debt they've got into since I last checked, it seems that the company was actually going underwater ahead of the FID. I'd been keeping track of their finances with their half year report, and bear in mind this is only in Canadian dollars. They only had 6 million Canadian dollars left in cash. They did actually look like they were running out of cash, but all the same, this is great news for Cornish Metals shareholders, and it's great that they've got money to last till the FID. And I consider this really a bolt out of the blue. This 28.8 million of free taxpayers' money has come in from the National Wealth Fund, and like a bolt from the blue, it's allowed them to scramble together this 56 million fundraising. So yeah, that in itself is great news. But there's lots of other information to piece together since my last video. So I'm now going to go through all these other snippets of information that can be gathered since then before giving you my final conclusions about Cornish Metals. So actually, immediately after I did that video in April and bought some, they released their preliminary economic assessment, And in this, we got a NPV of about 201 million US dollars. That's assuming a 31,000 per ton tin price. They also say that the AISC costs were the lowest quartile in the global tin industry, so I guess that's good. But they also announced delays to the project, with dewatering and shaft refurbishment moving to the third quarter 2025. And like I show here, quite considerable delays from what they were saying in 2022. We get some nice images of the processing plant they plan to build. But the most interesting thing is their predictions for the capex costs. Now, in my previous videos, I did some rough calculations and I was kind of working blind. I was using some information I could get from 2017 when this company used to be called Strongbow Exploration before it IPO'd on AIM. But from this data and doing some rough assumptions about inflation, I came up with my own mathematical models of what kind of returns you could expect. This is what they've updated, and it turns out I was off by about 25%, which, given that I was kind of running blind, is probably not too bad. And I've used the inputs from the PEA, and now my NPV actually matches theirs quite well. But what this tells us is that although at a 31,000 tin price, we're perhaps looking at a going concern, as soon as the price starts to drop, you really have to question the feasibility of this project. Conversely, if the tin price goes up by 25%, the returns from the project actually double. So, although this is obviously all very amateurish and pass it by your financial advisor, it is like a useful rough tool to kind of measure what kind of risk returns we're looking at. But then you've also got to think about all this extra money that's been spent that I wasn't really expecting it to be this costly just to get to the start line. When you look back to the general impression I got from the information going back to their IPO in 2022. So they're over a year late, and they seem to be spending a lot of money getting these tasks done, more than I expected. And from the actual recent fundraising, where they've detailed these numbers, you've got to consider that this is a 56 million capital dilution, of which only 20 million is capex that will be post FID. So that means we're looking at about 36 million of stock dilution, with the money kind of being dead money in a way because it's pre-FID. So when I take into account that, which I've roughly calculated about 65 million Canadian dollars, we see that we're only really looking at a 2x very roughly. But obviously with a higher tin price, that could then become a 4x. But still, looking at the price of tin, it's not really that attractive a risk reward profile. Whereas at the same time, being a slightly tasty speculation on the price of tin. And so, based on my rough workings here, I think this explains why the share price dropped a lot after that PEA was released. There have been other indicators that they were running out of money. They sold Nickel King project to Northera for 1 million Canadian plus an extra 7 million in shares. And then they've also sold some Canadian royalty assets they had for $4.5 million. Plus, in October of last year, they opened up a 7 million credit facility with Blue Vision Resources at an extortionate 15% interest. So, really, given the delays here that we've seen, all these little things they've had to do to rustle together some cash, and then looking at how their actual cash has been dwindling as well, on their balance sheet. The National Wealth Fund coming in with 29 million of free taxpayers' money, enabling a 56 million capital raise, really does come in as a bolt from the blue. In May, they bought some land, and in the RNS, there's actually a nice little diagram here where you see their existing land and this additional land that they've just acquired. So that all makes sense. And then in July, we got an update on the new cook's kitchen shaft. There's some great computer images there about it, and a nice picture there. And from this update, I actually pieced together this diagram because it is useful for them monitoring in the future their progress. And the first plan is to drain the mine down to 280 meters, which they've now done. The next phase was to then drain it down to 350 meters, and then after refurbishing up here, putting in some pumping stations on level 395, and then those pumping stations will be used to drain the remainder of the shaft and the entire mine. Based on this RNS that I'm talking about, they're currently behind schedule by at least a quarter, and I'm going to be keeping an eye on this to see them as they progress through the steps. It was actually in the 9 monthly report, which came out in November, that I worked out that these are all these deadlines have shifted from the fourth quarter of this year to now the first quarter in 2026, which actually coincides with their latest FID decision. They got in a new CEO, Don Turvey, in August of last year, who, on looking at his profile, he seems to fit the bill quite well. And then in August, they came out with an update on the Carn-Brea data. That was this acreage here, the Carn-Brea South prospect. And they'd done 8 drills previously to look for how much tin there was in this Great Flat Lode prospect. And one of those drills had actually intersected this wide formation where they said there was promising amounts of tin, with potential for loads of tin here. So in the RNS for that, they come out with the latest data for the 14 additional drills they did after discovering some tin in the Great Wide Formation. There's some interesting imaging here where they show a bit more detail. And so what I've done is, I'm not a geologist, but I can at least crudely try and assess how good were those drill results by plotting like I have here, the data they have for the actual South Crofty upper mine. And so this shows us what a kind of economically viable mine should look like. And then I've compared that with the 8 drills they did initially at Carn-Brea South, and then plus these 14 additional drills that they've done. In regards to this wide formation, when I look at the wide formation results, they're actually mostly coming out not all that great. Only like 2 of them have come out good. They have actually found some other interesting structures, such as this here, kind of in between the Great Flat Lode and the wide formation. So there is obviously some tin there, but generally when I compare my reference I have up here with the results I see here, what I'd say is, yep, there is more tin there if they want to scrape the barrel, but it doesn't really take my breath away, the results from here, at least from my amateur assessment here. I find it very interesting the wording they use in this RNS. They say they've found numerous mineralized lodes that have increased their confidence in the company's exploration model, and confirm the potential of systematic exploration. So the fact they're kind of not saying, yep, we've found a mega load of tin. What they are saying is we could do systematic exploration. That means to me that they can use systematic drilling to scrape the barrel around here to extend the life of the mine by a few years, but it isn't like a massive new discovery that we should be getting excited about. So that brings us up to last week's capital raise, and really, yep, it's great that we've got all this free taxpayer money off the National Welfare Fund, and it's great that they've raised 56 million. So we've got the money now, hopefully, to get us to the starting line, being the final investment decision at the end of the first quarter of 2026. However, there's a lot of information here, and from that, we've gathered only 20 million can be baked into the FID money in terms of capex spend. And so we've got about 36 million of stock dilution here, which is going to be used on cash burn, which is kind of cash burn that we weren't expecting back in 2022 when they IPO'd. So we're really only looking at a rough kind of 2x by my rough estimation as an amateur. So it's not really the kind of risk reward profile I'd be investing in now. But as it happens, I've already invested in Cornish Metals. It's great that they've achieved this 56 million fundraise. Thanks very much for the free taxpayer money. And let's see. Ultimately, Cornish Metals are a bet, a speculation on the price of tin. If we don't see us surpassing this 31k level, I'll probably be getting out of them ahead of the FID. If, however, we do see an increase in the price of tin, then it's going to be great holding on. And I'd probably get out even pre or post FID once I'd achieved that kind of 2x, or maybe I'd wait for longer depending on what the actual price of tin is doing. Really, for me, it's clear that if the price of tin drops, I'm going to be getting out of Dodge very quickly, and it's a case of holding on for the tin price. And we really want to see a sustained increase in tin price for us to be confident in the final investment decision actually happening. But really, as far as Cornish Metals are concerned, all there is to say is it's all dependent on the tin price. And thanks very much, Rachel Reeves, for all of that free taxpayer money. Keep us going another year. So that concludes my video for Cornish Metals. I hope you found it entertaining, and I'll speak to you in the next video. I do videos like this one just for fun as a hobby. It's for entertainment purposes only. Always consult a qualified financial advisor before making any investment decision.